Alrighty, welcome everybody. It is Thursday, January 23rd, 2025. Income Navigator live trading and training here today. We're going to spend again some time on the Psar indicator and what is the Parabolic SAR indicator, which is the parabolic stop and reversed indicator, which was created by Wells Wilder, who's created several other indicators that we use. And I'm going to talk about how we use it. Like I said, no indicator that we talk about should be used in a vacuum by itself. They work best with something else. But the PSAR is a good little indicator that I don't think gets enough recognition out there. I don't think enough people use it. I like it. I think it gives you some pretty interesting heads up on when things are going to reverse. And for me, I'm a trend trader. So primarily, if I'm going to trade shorter term stuff, not necessarily exactly what we do in Income Navigator, but to a large extent, I'm a reversal trader. I like to catch something when it's oversold or overbought and starting to reverse. Guys like Gabe, who's in our Discord, and he runs a lot of the stuff in Active Trader. Gabe is more of a breakout trader. So Gabe loves to trade the breakouts and different levels. I'm not as good at that, but I like reversal because I'm a premium seller, not a buyer. And when you're a premium seller, to me, it makes the most sense to sell premium or to sell puts or calls or something like that. It makes the most sense to me when something's reversing, okay? Because I don't want to sell naked puts at an all-time high. I want to sell naked puts when we've come down and we're starting to reverse and go back up. So I'm looking for reversals in like the MACD or the RSI or the PSAR or the stochastic momentum. I like reversals. Doesn't mean everybody has to. I'm just giving you how I like to trade. But as a potentially reversal trader or someone who's selling premium, and you want to sell on pullbacks. Okay. Now, the exception to that are some of the campaign trades that we do. So doing a 1-1-2 trade every 2 weeks has no bearing on the technical pieces. Okay, we're just selling that mechanically every 2 weeks. We've back tested it. We know that it works over time. So why does it work over time? It's a good question to throw out there. Well, why does a 1-1-2 trade or a SPY leap or Igor's Monday, Wednesday, Friday SPY campaigns, why do those work long term and they don't use any technical analysis? So it's a good question to ask, which basically tells you that technical analysis is worthless. But anyway, anybody want to pop that in chat real quick? So why do these campaign trades work over time when you do them? Anybody? Bueller? Bueller? First person to respond. Somebody melt up. Why else? I mean, yeah, to an extent that markets go up over time, which is markets go up, markets go up. They follow the market trend. But if we're not looking at the charts when we're doing it, melt up. So most of you are statistics. Okay, you're getting close. Theta burning. You're close. Fry, Eddie. All right, probabilities. So primarily the reason that most of these trades, okay, now Linda's jumping in. Okay, I knew Linda had that. But the primarily the reason a lot of these trades work is we're simply trading the probabilities. When you're looking at delta, which can approximate your probability of profit on these things, if we're selling something that's typically a 10 delta, for example, you should believe that you have a 90% win rate or so over time. Okay. So you're not, the 10 delta means we have a 90% chance of not getting. This is very, hang on, just had a little pop up here. I don't know if somebody popped this up or what have you. Okay. A 90% chance of something expiring and not going in the money. Okay. So it's only a 10% chance of going in the money, 90% chance that it will stay out of the money, it won't get touched out there. This is why probabilities work. This is why option trading and selling premium works. Not necessarily the picking up pennies in front of a steamroller thing, because you are taking on a lot of risk for a lot less money when you're selling premium versus when you're buying it. However, the trade-off is that you have a much higher win rate. So do you like the higher win rate? I like the fact that I have some more safety. I like the fact that I can be right, almost right, and even a little bit wrong and still win, as opposed to if I'm buying options, I not only have to get direction right, I have to get the timing right, and I have to get the magnitude right in some cases as well too, because I have to overcome the premium that I paid. I have to overcome the theta that I'm paying for, not versus that's not decaying for me. So you have to be right when you're buying options, you've got to be right on time, direction, and magnitude of the move most of the time. Okay. You can buy an option, be right on direction, okay, but if that option expires before the move starts, you lose. If that option doesn't move up as much, maybe it only moves up a little bit, but doesn't overcome the amount of premium you paid, you still lose. So you have too many ways to lose when buying options. When you're selling premium, we can be wrong on direction, we can be wrong on the time, we can be wrong on the magnitude of the move, we can be wrong on everything and still win, okay, as long as it doesn't go down as far as our strike. So I'm a big chicken on these things, but I like to just be right more than I'm wrong. It's a good feeling, and I think it's mentally, for me, a lot more positive to have a nice 80%, 90% win rate, as opposed to a 40% win rate and be losing too many trades, even though your winners, when I'm buying options, can be far larger than anything you can do selling premium. If you really want to make boatloads of money, you want to make that money being right on longs and letting them run and understanding how to get it off of trades. However, it's a tough game and most people will fail because mentally they can't stay in the game long enough on the win rates that they have, and it's very difficult to find a way to be right on direction, time, and magnitude. So it's easy for us when we're premium selling a little bit. You know, trading's never easy, but anyway, I just want to give you some sense. But when we're selling options, the reason campaign trades work so well is that the probabilities play out over time. It's positive expectancy. If I'm going to sell strangles at 7 delta on the puts and 7 or 6 delta on the calls, I should have a 90+% win rate. Okay? And because of that, uh, you should win the majority of them. However, you're going to lose some, and when you lose some, uh, you got to make sure that you've limited your size. So if you have a 2x or a 3x loss, and there was a good post yesterday, I think it was David, who put it into the main chat of, hey, when I was back testing, I saw that 3x had a better win rate than 2x. Most of the time, that's true. Why? Because what we are doing as traders is we are stopping out way too early and we're not letting the probabilities play. As soon as you put a profit target or a stop loss on a trade, you've now hurt your probabilities of that trade playing out over time. Okay. If you would just sell puts at 10 delta, let's just say that, you should win 90% of the time, no matter and you really don't need a stop loss. The question is, can you mentally handle the large drawdown, okay, before it reverses, which it will reverse 90% of the time you're going to win. Just the 10% of the time that you lose, can you control the drawdown that you have in that? And when I'm testing and using options omega or something like that, I test everything. So I'm testing the strikes, I'm testing the deltas that I enter at, I'm testing the time in the trade, I'm testing the stop losses and the profit targets. What I found was the larger your stop loss, the better your win rate. However, you had large drawdowns. Can you survive some of those large drawdowns? Maybe on August 5th of last year or in COVID, you might not survive the drawdown. So now you had to put some guardrails in place, which would be your stops. Hopefully this is all making sense, helpful, and maybe this is all stuff that you guys already know. But you want to give yourself the best chance to be successful. Where a lot of traders fail here too is you put on a couple trades and you lose. Okay, we put on we sell some naked puts and bonds and we lose one or two and you swear I'm never trading bonds again because you lost a couple trades. Okay? Or you put on strangles in gold and now gold breaks out or breaks down, usually breaks out to the upside or something, but now gold, you lose on two strangles in a row. Okay? Because you lose on two strangles in a row, most of you will quit and you will never trade gold again. Okay? Maybe you lose on three in a row. Okay? Same thing with zero DTE. I haven't lost a zero DTE trade in 3 months, 4 months. Okay. Uh, so I rarely ever lose a zero DTE trade. However, you can go on a run where you lose four or five potentially in a row. Most people will quit. You've got to have enough of a sample size to let the probabilities play out. Two or three or four or five or 10 or 12 or 20 trades is not enough to let your trades play out. So it is, and there's not a lot of things I love from Tasty Live or Tasty Trade or whatever that they do, but I love A, sell premium. Two, uh, the thing is trade small and trade often. That's 100% exactly what you need to do. You need to trade small and you need to put on enough trades to let your probabilities play out. Uh, okay? And all of your trades should be sized appropriately. So for me on Strangles, at one point I was doing a 50% profit target and a 3x, a 2x loss. Well, then, but a 3x loss, if you backtest it, actually improves your win rate. But you have larger drawdowns on a couple of those losses. But it didn't improve the overall P&L, and even it improved the overall P&L more than a 2x loss. However, I didn't like it. Okay. And if I was winning 80% of the time, and this is key when you're trading like credit spreads and things like that, if you have an 80% win rate with a 50% profit target and a 2x loss, you can never make money over time. It gets impossible to make money. If you lose, if I win eight trades at 50% and I lose two trades at a 2x loss, they completely cancel out and you can never make money. So over time, with enough strategies on, you can't overcome that expectancy. Okay? You have to make some tweaks somewhere. I did a very large strangle study here. I think I placed it somewhere. It's probably in back tests or something somewhere, I believe, where I tested every permutation of delta on the puts and calls, as well as time, as well as profit target, as well as stop loss size. What I found and came up with was while the 3x stop was better from a P&L and a win rate size, the 1x, 1.5x stop, which is where I am now, wasn't different enough in P&L to make it worth me going to 3x, if that makes sense. So the 2x loss was fine, but what I was finding was, you know, most of the time, if I hit a 1.5x stop or 150% stop, it was going to 200. Okay. That just seemed to happen the majority of the time for me. A 150% loss went to a 2x loss. Okay. Had I just stopped at 1.5, I better won the trade. However, I'm hurting my expectancy by stopping out early, like 1.5 versus the two. However, if my win rate is largely the same, 89% versus 92% or something like that, I'm willing to take a little bit a lower win rate to have a better overall outcome if I continue to keep winning these at 90%. I didn't change my delta, so my percentage win rate theoretically is going to be the same. In actuality, it's a little lower with a 1.5x versus a 3x or a 2x, but it was worth it enough for me to make that change, and I've been a more profitable trader. Strangles are still, to me, one of the greatest trades out there. I love strangles. I just found for me the best combination after I tried every combination I could test was 50% profit target, 1.5x loss, which would be a 2.5x stop. Okay, hopefully this makes sense and is helpful. Uh, yeah, Bob put in there, a solution if you want to move from 2x to 3x is reduce the size of the trade. Well, that's all well and good if you want to do that, but you're reducing the size of the win as well as the size of the loss. If you're trying to put together enough trades, can you reduce your amount of wins and still hit your goal of 1.5, 2, 3% a month, whatever you're going to do. Okay. Otherwise, you have to put on more trades. So while you could reduce the size, and my size is smaller on my strangles. So my strangles are typically not a full 2% loss. They're closer to like 1.5, 1%, something like that. Okay. So my size is not full 2.5. Now that my rules are, at a 1.5x loss, I don't want to exceed 2% of my net lick. I very rarely even put that much at risk in there because I don't have to. Okay. For me, I only need to generate, if you look at my trade tracker, I only need to generate so much income from my strangles, right? So I only want to generate roughly $3,000 a month from my strangles. At 50% profit target, that means I need to put on about $6,000 worth of premium constantly. Okay. So if I'm putting on, so if I have three trades at $2,000 of credit would give me $1,000 of income after the 50%, right? So three trades with a $2,000 credit will give me $1,000 as long as I'm winning X percentage of them. And for me, I have a nearly $400,000 account that I'm trading here with you guys. Well, 2% of that's $8,000. But I just told you my average trade is maybe using $2,000 or $3,000. So a 2x loss on that would be six, or a 1.5x loss would only be 4 or 5,000. So I'm still well below my 2% on this. And if I can't find it, I need to generate enough cash too. If I can't find enough trades, if you make them too small, okay, then you're struggling to find trades, and now you might start forcing trades with it. So you got to find a balance of I can't just put strangles on if I don't see a setup for it. And there's times where I don't see a setup. Now this week I put on several strangle trades in the account. So we have three strangle trades on. Two of them we put on this week. So we did one on ZB, we did one on oil, CL. I already have another ZB1 working, and I had another CL1 working, which actually just came off today at a 50% winner. But one of my best win rates on anything that I do are strangles. Right now, strangles, I've generated $2,200 in strangle money this month. Two strangles have come off for about $1,000 each, I believe. Today's was 1,080, and then I had one for $1,100 on ZB already come off. Okay. I know I'm talking to you guys, and I hope this is helpful, but I want you to just get an idea of how I'm trading it and how I'm using those. Okay. But the 1.5x stop, you guys got to look at the back test. There's a strangle back test. I can probably try to find it. Okay. But that's where I looked at SPY strangles, and I just went every different version I could. Took me a couple days to just keep trying to tweak it. And then I figured, you know what? I'll give up a little win rate for a little bit better comfort for me. Okay. I made a little bit less money. I didn't have quite the P&L gains because a dangerous thing with backtest is a lot of you guys will backtest and you'll think, oh, look at this thing is a 60% gain if I do it. Well, that's a lot of risk and it may not work out all of the time. If I'm going to make that big of a gain, there's probably a lot of risk that I have, and the drawdowns could be substantial. And if you have a 3x drawdown, you might improve your win rate and it might also look better on paper. But do you really want that drawdown size? Can you handle that? I don't. Last August, I had a pretty good sized drawdown on my 112 XL trades. Okay. The regular 112 long terms, not so much because they were hedged a bit, but the long-term 112 XLs, they weren't really hedged. I had them on, they were extra trades. I had trades over and above. Took a pretty good loss on those. It's a big drawdown. Okay. How many of you can handle a $120,000 drawdown on a couple trades and then not want to quit trading? Okay. I've done it multiple times in my life. So I've had multiple 5 to 6 figure drawdowns. You know what? It is what it is. You learn and get better each time. Okay. But just one drawdown, hey, if I lose 20%, great. Because I'm pretty much confident that I'm going to make it back up pretty quickly. Yeah, I'm up, what, 300% in the last 5 years with 120% drawdown in there. Okay. You got to find what works for you. Yeah. You got, I'm dead serious. Okay. If you haven't taken a major drawdown, but that's where most people will quit. That's where a lot of members here quit. They gave up. They went to find something else that they think is safer and better that has probably not been tested. At least you know that I lost and I figured out what I think will solve it. Okay. And we're back on it and we're hitting new highs. Now we've made most of that back. So it's all good. And I'm expecting to have a good year this year. In 2022, I made 82%. Why? Because the market went down and we hit our traps 56% of the time. Okay. Because we were just generating gobs of money in the 112 trap. Okay. It was a fantastic year. Strangles were still working because premium was up, volatility was up. Strangles work. Why? Because probabilities play out. If you quit trading gold strangles, or you quit trading oil strangles, or you quit trading 112 trades, without really letting the probabilities play out over time, okay, that's where you're going to struggle as a trader because you're going to keep bouncing from one thing to the next. All right, so I know I've like deviated significantly on this from what I was going to talk about here, but I wanted to start off just talking about probabilities and why we're premium sellers. Okay? You've got to trade based on probabilities. In fact, if you really watch Tom Sosnoff and Tony Batista, they use no technical analysis for the most part. Tony does a little bit. Okay, Tom really doesn't at all. They're just playing the probabilities. They don't even believe in technical analysis, which is why Tasty Trade has the worst technical analysis platform of any brokerage platform out there, which is why I use TradingView, or I still have a Toss account with some money in it, so that I can use some decent charting, because Tasty doesn't believe in charting. They believe in letting the probabilities play out. This is why you get the pop ratios, okay? Because they don't care about it. Yeah, Eddie, their platforms obviously don't make charts. That's right. Okay. Okay. They make tons of money without using the chart. Okay. Batista does a bit. Tom says he doesn't. I don't know if I believe that or not. I'll ask Tony the next time I talk to him. But anyway, long story short is, as long as you let your probabilities play out. So I'm a reversal trader. As I said, I like those setups the most. This is why I don't like things that have been trading and we're sitting at these all-time highs out there. So let's get into some charts, and we're going to talk today and really go through the Psar and what that is. So I talked about it a bit, but essentially what the Psar is the Parabolic SAR indicator, okay, is represented by a bunch of dots. It's a series of dots on your chart, okay? And they're either above or below the price. If the dots are below the price, okay, we're in a bullish upward trend. If the dots appear above the price, we're in a bearish downward trend. They're also separated from the price a bit, unlike a moving average, because you can easily see where they are, but it's the distance between the candlestick or the line or whatever you're using and the dot has, to me, has some validity. The closer we start to get, the more chance that we're heading towards a potential reversal. And when the dots switch positions, they go from above or to below the candlesticks, then you have a potential trend reversal. Again, don't use it in a vacuum, and make sure that you're using it in combination with other things. But again, when you're above the chart, above the dots, you're bullish. Okay, that's where we want to consider being long. And it works in almost any time frame. It really works well in short time frames. I find works pretty well if you want to day trade things, but don't use it in a vacuum. And when candlesticks are below the dots, then the trend is bearish, heading down. We can be short. The trend reversal signal happens when the candlestick touches or crosses through the dot. As soon as we touch or cross the dot, then it's going to flick. It's going to flick it to either a bearish or bullish reversal. And the SAR is built on a couple things, but one of the things it's looking at momentum of the moves, number one. So it's looking at the momentum of the move, as well as a few other things taken into context here without getting into how it's calculated. So you can see when momentum of the move may start to be running out, which we can see in other ways with RSI, MACD, stochastic momentum indicator. So the trend reversal signal here again is when it touches across through the dots. Uh, and then you can also use these as a little bit of a dynamic stop loss if you're doing some more day trading or actively swing trading, looking at where the dot is, that if we drop back down to hit the dot, that's where we'll stop out. So these dots typically trail the moves. If the dots are beneath, which indicates a bullish move, as the candle moves higher, the dots are moving higher behind it, then eventually they do reverse and we switch and go into a different trend. All right. So they're nice for swing traders. Okay. We can use a daily candlestick chart, analyze the trends, identifying the change in the trend, and you really need a trending market. Okay. If the market's not trending, the Psar doesn't really work well. It's going to give you all kinds of fake signals, and you really want this thing, okay, in a solid up or solid downtrend so you can see where we are. Okay, so it works best in a trending market where we're strong, directional, moving one way. And then avoiding sideways markets. Okay, and I showed some examples today, and we'll get into a few more here as we look at some charts and try to look for some potential trade setups that we may find out there. Uh, you can also use it for day trading, same thing, 5-minute charts, 15-minute charts, whatever you want to do. I like the 15 and the 3. Those are my two charts. I always like two charts, a longer time frame, shorter time frame. I like to see that they're both in sync or giving me similar looks to things. If the longer term time frame is up, but the shorter term is down, it might be great for a strangle. It is not good for a directional move necessarily because you're just kind of fighting inside of that. You want them to be synced together. But the Psar can give you some ideas of when are we, if the longer term is up and the shorter term is down, but we reverse, that's when you want to get in because now they're both going the same direction and you got in at the bottom. All right. So again, avoid sideways action. And then combining these with other technical indicators, moving averages, RSI, MACD, it works best when you can get confirmations on all of these directions at the same time with other indicators. And a couple things to think about here, some strengths and limitations of it is it's super simple. I mean, there is no easier indicator to read than the Psar. It's pretty easy. Where's the dots? Are they moving up? Are they above or below? There. Gives you a pretty clear signal for trend direction and reversals. And it can also act as a trailing stop loss if you're actively trading, which I think makes some good sense. Okay. I will post this guide when I post this video here shortly. It'll be in the technical analysis section. And then again, it doesn't work well in a sideways or choppy market. And right now, we have a lot of that on some stocks. NVIDIA is one. There's a handful of these stocks that have just been moving sideways that you really can't get a handle on right now. And it works best when combined with another indicator out there. Real quick, and if you're doing a swing trade, if the candles move above the dots, we now have an uptrend. Okay, which means now you could potentially place your buy order, set your stop right below the current Psar dot. Okay, and then as the dots move up with your stock, they act as a trailing stop, and you just keep moving your trailing stop to where the Psar dots are, and then you can exit the trade once it flips in price. All right, so there's some key takeaways. Hopefully this was helpful for you. Let's look at some real life examples of this and maybe try to identify some potential trades out there. So let's look at some trades. Make sure you're seeing my charts. Let me get off the screen because you don't need to see me anymore. So here's how we're going to use these when we're actively selling. So let's look. We'll look at ES, and you can see I've got the weekly and the dailies here. Hopefully these are clear. I know there's a lot of stuff, but you can see the white dots running along the lines as the candles are moving up above these white dots. Okay, we're bullish. Okay, but you don't want to get in, as these things are getting starting to get closer together, you want to get in when this thing flips initially, okay, which gives you a better entry point, and then you want to get out as we start to get close or we flip the dot. So you can see we ran up here. The flip happened right here. Okay, you can see these. I don't know if you can see my mouse, but you can see these four dots right here. You can see on this candle, we came up and we tagged where the fifth dot would have been. Okay, because of that, we switched to dots below. Okay, so now refigures out where the momentum and the reversal move should happen. So we were, even though we were moving up, we were still in a bearish mode. Uh, on this, we were in a slightly bearish mode. You can see it's a little behind the curve. Okay, so you don't use it in a vacuum. Okay, this would have been the time to get in. And then eventually we flipped it back over here when we touched the next dot and we got out. Okay, pretty small little gain on this. It's not great to get into a trend that's already been moving. Okay, so Psar is not always timely, which is why we use other pieces. If we're looking at ES right now, I mean, we were in this downtrending channel. It was pretty obviously that this was higher low, lower highs, lower low, lower high, lower low. Down here, we put in this candle. Okay, we're pretty far from these dots. Okay, so we're pretty far from the Psar dot. Okay, but MACD on this next candle, MACD switched. Okay, stochastic momentum started to cross over and start to move higher, and RSI stopped its downtrend. Okay, so MACD also here stopped its downtrend, okay, and started to reverse. Everything happened right here on this candle. Okay, so hopefully you guys can see what I'm talking about, but this area here is where things started to move, but the Psar dots continued, okay, for 2 more days. Okay, there was a big move up. This is where we actually moved up very close to it. The next day, we triggered the dot. Let me see if I can get rid of the annotations on here. But so you can see exactly, this is exactly where we reversed overall. All right, so knowing that, in here, this is where we made that move and started to head our way higher again. All right, hang on, let me get rid of these annotations if I can. I've lost my annotation piece to get rid of it. Let's see, come on. All right, so let's get out, let's get back in. And we're back on. All right, so you can see where we reversed down in here. This would have been the signal to get in. According to the Psar, we were already reversing on MACD. We were already reversing on RSI. Okay, and then we were already reversing on stochastic momentum. Everything here was lining up. Okay, for this move. And so everything in here lined up. Psar reversed, everything else was reversed. Things looked pretty good overall for us to move. Right? So based upon that, we're pretty happy with where things were. Okay, let's see if we can get rid of that piece on here. Okay. All right, so Psar, good signal there. Now, right now, you've got Psar is down here and it's rising. We're way, way, way away from this. So we are in a bullish mode. We're way away. You can see these dots getting further apart and getting steeper. The farther apart and the steeper, the more momentum we have going right now. We're up today. Things look pretty strong on the S&P. There's really no reason to think that we don't go higher, except for the fact that maybe we're going to hit into this Bollinger Band, and will that start to slow the momentum? But on the daily, we're not in danger of a Psar reversal anytime soon. What I think is interesting though is on this move on the ES, volume is dropping. Okay, we are getting into overbought territory on the stochastic momentum, and RSI is heading closer to overbought as well. So we're getting overbought. Psar is not ready to flip anytime soon. Okay, but so right now we stay in it, but this is not the time to get in. The time to get in was when we started to see the initial flip happen. That's when you want to start to get in. So nothing available here on ES. If we're looking at crude, we just flipped. So we were bullish, 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 bullish. We flipped on this day. Now, MACD had already started to roll over. RSI had already rolled over. So back in here, I don't know if I get a good, okay. So back in here, you've got everything starting to tell you that this is the candle uh, where things are starting to happen. Okay, underneath. The PSAR has not agreed yet with that. It's still heading up, but we were farther away from the candle. Now we're getting closer to the wick. We're getting even closer to the wick, so you know potentially a reversal is coming. This day, oh, so close. We didn't touch the dot, but we were doggone close on this dot right here uh, to reversing. We didn't reverse yet, but you could just feel it was coming. MACD had already started rolling over. RSI, stochastic momentum, a good indication here that, okay, this thing has lost its way and the trend is reversing here. So we've lost our trend. We're starting to reverse overall. How do you play this now? So now you can set your strikes and decide on your move based upon what you're seeing. We definitely see a reversal in crude. So what would you do in here if crude is now reversing? Well, exactly what I did, which was I sold a naked call. Okay, I sold a naked call. I actually sold it a while back, but I also wanted to put on a 111 at the money trade yesterday in here, which is playing for this thing to come down. Okay. I sold the 60. So we're way down here. You can't even see it on this chart very easily. Okay. But I sold the 60 level. So this is where I sold the naked put. Okay. And then my trap on the at the money 111 trade was the 73 and a half. So here, 73 and a half, 73. Now, I'll get as close as I can get uh, to this, something along this. That's a pretty narrow credit spread, but this was the credit spread. So anything in this area for me, okay, from here to here, this is the trap. So this is the trap on the 112 trade. You could use a Jade Lizard. You could have sold a bear call spread up here. You could have sold naked puts up here above these lines. And you could use the PSAR dot up here, which is also the exact same spot as the 3 ATR band and the Bollinger Band and this resistance level. Anything above this is a good place to put a call credit spread and play something to the downside. I happen to take a different approach on it. I could have done either one. Let's get this off. Okay, but I played a 1-1-1 at the money trade, which gives me this trap down here. So if we head down and we break this level and we head into this trap, uh, now we're going to pay off bigly. Okay, so I've got 10 contracts at a half a point wide. So 10 contracts at 1,000 multiplier at a half a point wide is a $5,000 trap. Okay, so this trap, okay, is worth $5,000 for me. Okay, So we want to get into this trap because that trap's worth 5,000. If we stay above this at like any other 111 or 112 trade, okay, you have the tail. Okay, this tail, I don't know if I can do that. I can't do it. All right. This tail is worth 500 bucks to me. So here's the 112 trade or 111 trade. It goes to infinity up to the top. There's no risk to the upside. If we stay in this upper piece, I make 500 bucks. If we go in here, I make $5,000. I'm betting that it's not necessarily a directional trade like a call credit spread would be. It's a bear trap style trade where I have no risk to the upside, but if we do dip into this trap, okay, we're going to make some cash. All right, so I hope this it helps make the at the money 111 trade a little more clear because the put debit spread is right where these two different shaded boxes meet. This is where the put debit spread is, which is very close to at the money. Okay, it's just um, slightly out of the money on it here. Or it might be, yeah, it was a little bit out. Maybe it's a little bit in the money on it, sorry. But a little bit in the money on it, but not much. Okay. However, this trade for some people did set up well. It sets up well for me because I have naked calls that I'm still sitting on up here, and I'm not getting rid of my naked calls because we are in a bearish Psar trend. We're in a bearish trend. We're breaking below some key levels here. MACD is falling, RSI is falling, stochastic momentum is falling. So for now, there's no reason for me to change. And if we look at the weekly chart, okay, the weekly chart's actually bullish. It's flipped from bearish to bullish, and it's not changing anytime soon. So we can still pull back nicely and keep our bearish or bullish trend going. And why is that? Because this is a bullish trend. Okay, so we're bullish, but we're rolling over. I'm fine with this trade the way it is because I have no risk to the upside. So even in the longer term bullish trend that we're in, okay, I have no risk to the upside, but this bullish trend is running out of momentum. We've got an inverse hammer here, okay? We've also got RSI starting to fall. We've got MACD starting to roll over this week. I would like to see 2 weeks in a row of something. And then stochastic momentum might be starting to roll over as well. So oil doesn't look great. And if you really think about it, why would oil look good here? Uh, DTE for these trades, it really depends. Because I'm primarily focused on the daily chart for this trade that I put on here, I'm probably like a 45 to 60 DTE. I'm a 60 DTE guy when I run 112 trades and stuff. So I like the 60 DTE. That's kind of my sweet spot, but 45 would be okay. I just can't usually get enough credit, juice, premium, whatever you want to call it, at 45. It makes it a little bit harder. And I'm a chicken, so I want to get at 45 days. I don't think I could get the 60 naked put. I think I'd have to be at like 66 or 65. And it didn't feel like it was far enough away for me with oil coming down. So I had to go out to 60 days, but 45 to 60 days is where I want to be on this. If you look at the trade plan, let's see if it's in the trade plan here. Da, 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 da. Hope this is helpful, guys. And feel free to drop comments in here on this, but I'm hoping this helps with some trading options. Let's see, where's the 111? I had it somewhere. I'll have to find it. The at the money 111. I know I just built it somewhere. But if you look at the trade setup on my 112 trades, typically we're talking 50 to 70 DTE. 60 is my preferred, so I like 60 DTE on most things that we have going on. So, all right, hopefully that makes sense. I don't know what I did with that. I swear I wrote it up today. Give me one more second to look at something else on my screen. I think I know what I did. I know dead air is not helpful. Hmm, I cannot find it. All right, I will find the write-up on it. So I do have a write-up on the 112 and how to manage it properly. So, uh, but 60 days is essentially where I am. All right. So this is the 112 trade or the 111 trade. This is how it looks for oil right now. If we're looking at gold, yeah, and when you're doing a 112 trade, yeah, typically your trap is much farther away because in a 112 trade, our goal is not the trap. Our goal is the tail. Okay, when you're putting on a 112 trade, you care about the naked put expiring at 90% or coming off at 90% winner, and you want the tail. The trap is always a bonus. In 2022, the trap was a big ass bonus. Okay. In 2023 and 2024, we barely hit a trap at all. Okay. Because the market only went one way and that was up. But we just kept making tail profit, which is our goal. So in a 112, your goal is always the tail, the trap. It's not a hedge, even though some people call it that. And maybe I'll even call it that sometimes by accident, but it's not really a hedge. It's simply a bonus for the trade. And in the 112C type trades that we do, we're still shooting for the tail. And then we leave these long term, long dated put debit spread traps on and we let them just ladder on. So they turn into hedges when uh, the naked puts come off. Now it's a hedge. Okay. While the trade is working, it's just a bonus. And if we ever fall down into it, it's a bonus. I mean, it doesn't really give you a lot of hedging properties. I even just said it. I don't think it does a whole lot of anything for you, except when you stack a bunch of them on, well, now maybe you have something there that's going to be worthwhile. All right, gold. Let's take a look. How does the PSAR work here? Well, you can see we're in a bullish PSAR mode. We broke out of this value area range. So in this value area range, you can see bullish PSAR, bearish for 2 days, bullish for five, bearish for a while, bullish again. But this was a sideways trading range. There was really no major lengthy trend in during this time frame. Even looking at the weekly here, there was no trend here. Okay. It was trendless. Gold has just been moving sideways. It was a beautiful strangle or other opportunities in here for a couple months from November all the way, to now. Gold's been a great kind of a strangle setup. Okay. So the PSAR doesn't really work because there's no trend. Now we're starting to establish a bit of a trend in here. If you look at it longer term on gold, okay, well, we are still in this uptrend. Okay. So the PSAR here was bullish, 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 bullish. Oh, flipped to bearish here. Okay. Which means if you were going to play a longer term play on this, maybe you were buying, let's say, selling naked puts, leaps or something on this. I'm selling naked puts out a ways. We're in this trend. There was no reason to put strangles on. I did not put any strangles in gold because you get an uptrend that was pretty clear. Okay. You had the PSR, which was pretty bullish. Okay. Don't trade anything on any pullbacks. You could potentially swing trade it there, swing trade it there, but it's still a bullish trend. Overall, this trend is still in place despite this little bit of noise here. Okay. And you're back into a bullish PSAR mode, okay, on gold now that we're breaking out of this consolidation. But the overall trend is still up. This was a great spot, okay, to potentially play the reversal bounce off the trend line, off the 21-day moving average. Okay, PSAR was getting pretty close. This might be a really good spot. Okay, we broke out of this range 4 days ago. That break of that range was when PSAR flipped to bullish. MACD's already been reversing. Okay, this is a time, in my opinion, that you could potentially get bullish on gold. Okay, hope this makes sense. So this breakout here, I mean, you got everything in one. You got a symmetrical triangle break to the upside. You got a break of this value area range. You got a Psar flip on the weekly to bullish, a break of the of that range. This is good stuff. I mean, I think this is where you want to be bullish potentially on gold, and this could have been a couple different trades that you put on it. However, from a reversal trader standpoint, which I am, I'm not a breakout trader. So Gabe would have said, this is the breakout. He has volume profile and levels that he's using on it. But technically, this is a breakout. I don't trade breakouts as much as I trade reversals. I want to see, are we reversing somewhere in here with a, I want to sell low, okay, down here. So I want to sell naked puts or sell credit spreads when we're low. Okay. Uh, and then as we move higher, okay, I'll be able to buy that thing back uh, for little to no cost, which will give me a nice profit on it. So now we've been moving up. So for me as a premium seller, it doesn't give me a whole lot of ways to trade gold right now. Okay. Because gold's bullish. Everything here is bullish on gold, but we're not at a reversal level. I like a pullback before I get long. So what do? You could do what the one thing we did do was we popped a jade lizard onto gold about 21 days ago. Um, so I don't know what 21 days ago is, but today's the 23rd, so pretty close to the first of the month. Right in here, we popped a jade lizard on. Now, I'm going to peel this back a bit. So why did we pop a jade lizard, and what does the jade lizard look like? Let's do the same type of a thing that we did before. Now, this jade lizard, we sell the put at like 24.75. So down in here, right about here, 24.75. Okay. And then we sold the 28.05, 28.10. So 28.05, 28.10, something along here. Okay. Now the jade lizard, so this is the trap of the jade lizard. And then you also have the tail, which means you have no risk to the upside on the jade lizard. Okay. So as we look at how the jade lizard is constructed, in this trap is where I make my money. So I sold the jade lizard for 1,200 bucks. Okay. I'll never be able to grab this thing again. So you can see it. I mean, this trap goes all the way to here. Okay. So we're still in the trap. Okay. I'm $1,200 in this. As long as it stays in this big purple fat box, I make $1,200. Okay. If it pulls out of this trap, okay, now I'm going to make less because I have a call credit spread, which is going to limit my upside. But because I took in more credit than the width of the spread, okay, a, a, I have no risk to the upside. But this is 200 bucks. Okay. Right. So I made the trade down in here. I took off any risk to the upside. So no matter how high this thing goes forever, I still make 200 bucks on this trade. This trade cost me like $8,800. So 200 bucks on 8,800, okay, is about 2.5%, and this trade is 50 days. It's not a great rate of return. So, but what did I do this for? I wanted this, okay, I wanted this thing to continue. Okay, because we've been in this volatility area. I wanted to stay in this zone. We broke it. We're bullish. We might leave this trap, but I'm at a 50% profit right now. I'm at $580. If we get close to this level here, I will probably close it. If we pull back and just chill for a bit, I'll let it continue to work for me. What I don't want to do is, I really don't want to let this thing just start rocketing up here, which I don't know if it will or won't. I hope this is making sense. But There's no risk to the upside on a Jade Lizard or a 112. 112s don't set up great on gold. It doesn't set up right, but the Jade Lizard does. Okay. And so this is how the Jade Lizard, which is also the same as the ATM 111 trade. A Jade Lizard and the at the money 111 are the exact same trade. The only difference is the 111 we utilize a put debit spread, and the Jade Lizard uses a call credit spread, which are essentially the same thing when it comes down to it. But depending on what you use these on, you don't have assignment risk. Okay, so I hope this makes sense. But Psar is accelerating. It's moving to the upside. You can see these dots in here. So we've got a good bullish move going, but we are overbought on stochastic momentum. MACD might even be rolling over here. We've got RSI starting to maybe roll over from an overbought, even though the weekly looks pretty strong. The daily does not. And I've got 33 days left in this trade. So in 33 days, can I stay in this box? If I break out of it, okay, right now I've got $600 in profit. I probably should close it. Okay. I don't want to risk getting only 200. Okay. I might not get to 1200 because it may not stay in this. You have to make your call as to what you think is working, but we've been moving it higher so slowly that the decay of the theta is helping me keep more money in here than this 200. So we'll see what happens. But there's a lot of drawings on here, but I hope this visually gives you a sense of what a Jade Lizard or a 112 trade or an at the money 111 trade can do for you. And then combine that with the Psar signal. All right, let's take a look at bonds in here quickly. I know we're at the top of the hour. Let's see, Linda. Do you also have strangles on gold? No, I have no strangles on gold because why? Why no strangles on gold? Well, it would have been great to strangle gold in this range for a while. I just didn't have any on, but I was using primarily the Jade Lizard type of trade. We had some other trades on gold. In fact, what have we done? We closed anything this year on gold so far. I closed a put spread. So I had a put credit spread on gold closed for a 50% winner. Took a little bit of time. So we had a put credit spread, but again, because I'm a reversal trader, I put that on back in December. See if we can figure it out here. I put that put credit spread on December 9th. Okay, December 9th. Okay, right in here. So right in this spot here where we had uh, this pullback that bounced off of all of its moving averages and everything started moving its way higher. Here we had all the momentum. I put on the put credit spread and we came down, then we bounced and went higher. We still won on that particular uh, trade. So no strangles for me on gold, and I'm not putting any on now because, hey, in my opinion, it looks like we're breaking out uh, on gold of this value area that I highlighted here in this box, and then we're moving higher. I just don't want to strangle gold here with everything moving higher. If we start to roll over and come back down, then I think so. My other thing on strangles is when I go through my strangles, what is my new rule that I added? And I got this from back testing in Options Omega. So when I did my big strangle strategy move, not only did I test deltas and DTE and profit targets and stop losses, I also tested different technical pieces. I'm not a big fan of entering in the VIXs here or there because I don't really put any stock in the VIX or even watch the VIX at all. But what I did put in was what RSI gave me a higher win rate and a higher P&L. Well, I found that anything between 40 and 60 on RSI gave me a higher win rate and a higher P&L on my strangles. So when I redid my trade plan, that's now in the trading plan. When you look at it for strangles, is The one thing I'm looking at is RSI, okay, between 40 and 60. Okay. Well, right now RSI is at 65. It's too high. RSI is too high. It's too strong. It's 65 on the weekly. It's 65 on the daily. RSI is too strong. I'm not putting on a strangle because it doesn't meet my criteria. I don't want to see an RSI that's strongly moving one way or the other. Okay. So if I want it between 40 and 60. All right. So that solves that one. Let's go back to really quick. I know we're at the hour, so I want to wrap up with you guys. All right, so bonds, great example. Okay, bonds sucked for a long time. Big downtrend, no surprise there. Psar down, 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 down. We got close to the dot in here, okay, but we didn't hit it. Okay, down, 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 down. And then all of a sudden, here on January 15th, we flipped the Psar script. Okay, we hit the dot and broke through it, which flipped the dots to bullish. So now you've got a bullish Psar, at least on the daily chart. The weekly chart, okay, still no. Weekly chart still bearish. Okay, this thing is still in, a downtrend. Okay. And you won't flip those until you come up and hit one of these white dots, which is now at least at 118. I'm sure it'll continue to come down, and we might meet here around 116, which is going to be around this trend line or the 21-day moving average. That's all. That's all where I think things switch. So until we hit that, maybe longer term we're not out of the woods, but short term we got a nice bounce on this. That also coincided this PSAR flip with MACD flipping and starting to rise. Okay. RSI rising and stochastic momentum starting to rise. So all the momentum now was up. Now we lost a little momentum in the last 2 days, yesterday and today, on this move. We could still go back down and flip it, but we broke a strong trend here, and now we're establishing potentially a new uptrend. This will have to play itself out because the weekly is but bearish. I'm not putting tons of stock in this move, so I'm not buying lots of things. But what I am doing, okay, is, well, now maybe we're starting to consolidate a bit. Okay, how long do we stay in this area here? Let's see if I can link these up as well. I should have done it after I linked them up. So let's see if we can do that and if that interrupts anything. Okay, now let's unlink them. All right, so you can see here that we're in this trading range now. So it's a good spot. We're bullish on the daily. We're bearish on the weekly, which to me sets up great strangle trades. When one is doing one thing, the other is doing something else. Okay, I think that's interesting. Okay, I think that gives us a chance. Now, we're overbought, or I'm sorry, we're oversold and starting to reverse on the weekly. We have not flipped the PSAR, but everything else seems to be flipping and moving higher. So I'm a little cautious to the upside on bonds. Okay, right? Because we see some strong momentum daily. We're seeing potentially momentum shifting on the weekly. We could run up. Now we're going to run into all kinds of resistance problems. Okay, we got resistance up in here, which is, I know we're going long. Okay, we got resistance up here, okay, which is around this 115 spot, which you can see it on both charts. Now we got resistance here. We got top of the Bollinger Band up here. We got downtrend line up here. We got all kinds of overhead problems on this, but we could be seeing that, if we break through this trend, we might see something strong. So what would you do here? You want to maybe give yourself no risk to the upside, or I think just a strangle will work. So I did just put on a strangle the other day. My RSI, is at 44. So I'm between my 40 and my 60. The weekly is a little bearish. The daily is a little bullish. I like the yin and yang of that. We've been in this sideways pattern now for almost 4 weeks, 5 weeks. on it. We've got overhead resistance. We could still, I don't know that I'm buying the move, but my opinions shouldn't matter. It's just trade what you see. I like the strangle opportunity here. So we put on a strangle the other day. So I have two strangles right now in bonds running, but I do also have a jade lizard. Now, what did I do? This is the last thing I'm going to cover today. Uh, what did I do on a jade lizard in this thing? I have a jade lizard that's been on for 23 days, which has been on since the first of the year. Okay, so we put a jade lizard on here. Okay, but I did a reverse jade lizard, I believe. No, I did a regular jade lizard. So we did no, we have a reverse, I'm sorry, we have a reverse jade lizard, which means it's the same thing, except now I have no risk to the downside. Okay, because I still think when we put this on that we may have more downside to go. We're bearish here. We've been bearish here when I put this on. Two bears make a downside. Okay, so this thing, when I put this jade lizard on, we did from 105 to 126, and we'll put it on from the day we opened it, which is this day. 105, which I can't even get on the screen, so let's, we'll move this later. Okay, let's move it up. I could barely even get to 105. All right, so from 105, okay, to 126 on the day that this trade was placed. Okay. 105 to 126. There's no risk to this thing actually, because it's a reverse jade lizard. So I have there's no risk to the downside on this trade. From 105, oh, I'm sorry. What did I draw that for? So from 105, I got to fix this. Sorry. 105 on. So 105 and down, we have no risk. From 105 to 126, which you can't even see on here, is where the trap actually is. So let's see if we can get it here. Pull this up. Okay. So this is what this looks like. This is a reverse jade lizard. Okay. And when I look at the tail down here on this thing, see if I can pull it up for you guys real quick. And I apologize if this is taking long. I appreciate you guys just hanging with me on this. Hopefully it makes some sense on this trade. Anything below here isn't going to pay a ton of money down here. Let's move it up here. But in the trap here, yeah, lost it. But this trap pays $1,000. Okay, so it's a smaller trade, not a big trade. If we end up in this trap, I make $1,000. Down here, I have very little to no risk on this trade. Down below here. That's all I'm playing for, is to stay in this area. If we stay in this big giant area here on a reverse jade lizard, which is just simply the opposite of what we do. I'm just strictly playing like a strangle almost. I'm playing a strangle for this area with very little risk exposure down here. I don't think I make hardly anything down here. Okay. We just need to stay in this area. If we stay in this area, I make $1,000. Now, we've already made 68%. So we've already made $680, almost $690 on this trade. I could probably just take this off here. I don't want to risk coming back down to the bottom of this and losing this money, but how much time is left? There's 29 days left in this trade. So if we can stay in this range for 29 days, I'm going to make 1,000. Okay, but right now I've already made 680 of that, 690 now. So I could just take this off. All right, so this has been a pretty good review, I think, of how to trade some of these, how to use that, Psar reversal, which again is bullish right now on the daily, bearish on the weekly. It matches up with all the other pieces. So I'm using all of these things, okay, to effectively come up with some trade ideas and structure my trades accordingly on these. So hopefully this was helpful. You can see now this is how that Jade Lizard or the eight, the 111 at the money type of trades work, or the reverse Jade Lizard, where we have no risk to the downside. Most of the time, it's no risk to the upside that we're looking at with a standard Jade Lizard or the at the money 111, which is the exact same trades that we have. So when you do those, uh, I think it's helpful. All right, last question. I have a lot of junk on here. Let's do one more thing. Let's take a look at I know we're way over. Uh, Handful of people have left. We'll just give you guys one more thing. So if I'm day trading, so how reliable is it on 0 DTE? Well, let's take a look. I did not do any 0 DTE today, but let's see maybe what it would have looked like on 0 DTE today. Okay. And I don't know why TradingView loses 0 DTE trades so much. Okay. So, we opened today back in here. Let's take a look. So this is the 3-minute on the 3-minute on this side, and then we can look here for, today on the 15, right? So here's what we look like today. We want to get in usually around the opening 10:30-ish time frame. So somewhere in this area is where we want to get in. We had a bearish Psar, okay, and bearish RSI, all of that to here. And then as soon as we hit essentially 10:45, we flipped it to bullish. So we went bullish here. Now that also showed me that RSI was climbing at that same time. Stochastic momentum was climbing, and then the chart was climbing. We flicked it. So this would have been when I would have probably sold. Okay, we've already made the move. I like the reversal trade here. I probably would have considered doing like a put credit spread at this time. Okay, I'd already run quite a ways, so maybe not. And then if I looked at the same time frame here on the 3-minute, what were we doing at 10:42? Okay, we had already started this move up. Okay, 10:42, we were on a bullish PSR. I don't count this. I think there's just too much noise in here. But if I'm looking at the 15, I want to get the overall trend. This pullback here at 11:09 might have been a good opportunity. Okay, PSR flipped to bearish. Okay, then it flipped back to bullish here. There's just too much noise on the 3-minute, but I think on the 15-minute, it's clearer to see what's going on. This spot, my last thing, and I'll let you guys go. This spot, oops. To me, that was the opportunity. I'm a reversal trader when it comes to these 0 DTEs, which is why I have such a good win rate on them. This spot here, we came down, we broke the Bollinger Band. We didn't break the 3 ATR, so it was not a big, but I would have considered, with things starting to reverse here on this candle, this is where I would have started to probably sell a put spread. I would not have waited for the PSAR confirmation, although we got it 15 minutes later. I was probably in here on the reversal from down here. PSAR didn't give me that info quite yet. If I was looking at it did flip at 10:24. So maybe, if I'm looking at the 3-minute is when it flipped to bullish. So maybe that was the signal here on the 3-minute. This was telling me, yeah, This was telling me I like breaking the Bollinger Band, selling that. I think the market's a little tired, but we're still trending up. I think that was a good opportunity. So I think together, those things would have given me a better chance to be successful on zero DTE. All right. Hope that was helpful for you guys. I'm going to let you go. Long session here, but that's how I use the Psar in conjunction with other indicators. That's how I'm deciding what type of trades to use, whether I'm using a Jade Lizard, a 112, a 111, an at the money 111, credit spreads, something like that. I like reversals. I like to see us pulling back, reversing, doing something else. Unless I'm going to trade a strangle, then I just want to see us my in between my ATR bands or my Bollinger bands or something close to the 21-day exponential moving average. But trust the probabilities, let them play out. And if you do that, you're going to find yourself a better trader. All right. Hopefully this was helpful, guys. We'll let you go. Enjoy a great rest of your day, everybody. And we'll put all of this in the couple different trainings. I will tell you where they're going to go. If you're in the Discord, I will put this number one in the member training videos, but I'm also going to put this in the technical analysis courses section as well. So it'll be in both places. All right. Have a great day, everybody. Talk to you later.